Aloha, everyone. It looks like Carl Icahn kind of spoiled the party a little bit today, but overall, I really don't think it's that bad. I have Facebook up here because, once again, this is going to be my ultimate kind of my own little barometer on the stock market. And with Facebook even following through on its follow through on above average volume with Bob going green, it's kind of hard to be too upset about today's pullback, especially when we just had some set borderline sells. Nothing was too crazy. But going and getting back to the index, the Nasdaq sold off today, 0.73%, pretty ugly, closed near its lows. However, look at volume; it's well below average. IBD says the volume came in lower. I don't have Market Smith up right now as I make this video, so I can't look. But overall, it's pretty flat compared to the day before. And the New York Stock Exchange, you can see volume was slightly higher than the day before, but still well below average. So as long as it's below average, I don't think that there's any real concern that we need to take about the overall market. It just seems like, it's more that backing and filling. And like I said, why would anyone expect any follow through when we can't have a strong final hour and strong final minute on any day that we do break out? So until we see a strong day that ends with a strong final hour and strong final minute, this is to be expected, and the Russell 2000 would actually do some good by pulling back to the 50-day moving average. But overall, all of its oscillators remain in uptrend. Same with the Nasdaq; everything still looks good off the lows. Same with the S&P 500, so everything is pretty much just in order. I wouldn't get too concerned about the overall pullback in this market just yet. The main lows to be keeping an eye on here are the 615 and the 6.9 lows in the S&P 500, and I guess that correlates with all the other indexes. So as long as we're holding those lows, we should be good. We did have some sell signals today, going over the speculative stocks, OCLR, which was basically the best looking technical pattern that before 2008 used to be guaranteed money. Like I'd say OCLR, look at this chart pattern. It's at 277. I would not doubt that this stock is at $5 and eventually $10 in the near term future, but instead it leads to a cut loss. So OCLR failure, and then PCOM, another hot stock chart initially that did produce some gains, but it never quite produced 20% gains, and it never really did give a decent warning signal to get out of shares before it really kind of got all haywire. So we got out of some here with a small gain, but it's losing its green BOP catalyst, and it's closing below its 50-day moving average before producing any significant gain after already having nearly 20% gain. So PCOM is also a full sell with it closing below its 50-day moving average. And then recent longs that we got to cut. UTHR, another fail. This is the second time I've tried to go on long this stock, and the second time it's failed. I assume it's going to be like RAX, or it's going to be like, what is the other stock that I sold off that's now higher? That's escaping my brain, so we have to move on. My apologies. And then COR is actually officially failing. I got cut out of all of it yesterday whenever it moved below these lows intraday at 45.80, but today it's closing below 45.80 at 45.45. So COR is also a full sell. And the only other full sell that wasn't a recent long is CVTI. CVTI is pretty much a longer term holding. CVTI, let's go back to this one, was a long back here in late October, early November. It got up to as much as nearly a 75% gain, but today it's closing below the 200-day moving average, which is always our final line in the sand on above average volume. So that is a full sell. You can leave this one. We are leaving this one with a 25% gain on the remaining position. And you can do something. If you want to see if this 200-day moving average maybe is a fake out breakdown, you can now set sell stops on your remaining positions below 26.24. That is what I'm going to do. But on an end-of-day basis, I will no longer be tracking this, just like VIPS. VIPS also has not recently failed. Remember, I said that you could use a low a day, 22.95. If it moves to 22.94, you're all out. Today it hit 22.96. You're still in VIPS. Another long-term winner that is now closing below its 200-day moving average. So that's the second one in a short period of time, so I wonder if that's trying to forecast anything. Probably not. Just been long these stocks for a long time. Now they're not going anywhere, so by proxy, they close below the 200-day moving average. And on an intraday basis, I was taking out a 50% of BSFT. That's kind of cosmetic. It's fine by the end of the day. Kind of had tight stops there. What are you going to do? And then also, MITK did a terrible fake out, shake out on me today. My first sell stop was below 381. It hit that intraday. My final sell stop was at 374, which means when it hit 373, it triggered. And as you can see, that is the low of the day today, 373. But by the end of the day, it reversed on huge volume and it's closing at 394. So now what I'm going to do is take half of what got cut today, because I'm going to already assume that, you know what, it shouldn't have weakened. It's lost its green bop catalyst. So that already warrants half of the position size at least. But if it comes back, these are normally my best stocks, the ones that shake me out and then immediately come back. So I'm going to have a buy stop at 398 on MITK on half the position I was shaken out of. If it trades at 398, I'll be long. And if that has the case, the new cut loss is a move below 373, so it gets wider, hence a smaller position. So MITK would be a buyback. And then we actually have two ad signals. SGBK, which was a new long signal the session before, is giving an immediate ad signal. Its BOP remains at max green levels. Volume was almost twice as high as its 50-day volume average, and it's putting in an overall strong session whenever the market was weak on the day. And there were other regional small cap, low priced, low volume banking stocks that also did well today, confirming these recent signals. So SGBK, since it's an ad signal, not confirmed in any other scan due to the low volume. Once again, if this stock at least averaged 50K shares a day, which it doesn't yet, it will soon. I think it's just missing it. Based on the looks of it, it's just missing it. So it's probably averaging about 47, 48K shares a day. This would have been confirmed in the price volume BOP scan. Either way, just 1% ad position. And then HLTH, this thing just will not leave me alone. HLTH is giving another ad signal. Remember, we got buy signals back here, ad signal, then it failed. Then we got a brand new long signal here. Now we are getting an ad signal with a strong move today, up 1.05% on a day where the market was down 1% on the Dow Jones Industrial Average, above average volume. BOP remains max green. It has entered my max green BOP for 5 days scan, and it was confirmed in the price volume BOP scan because the volume surge is at least 1.5 times the 50-day average volume. So HLTH, 1%, 0.5%, since it's an ad of a speculative position. This is speculative long. However, if you look at the earnings estimates forecast for 2015-2016, you can see the estimates are for some huge gains in earnings, and sales growth is already there. So HLTH, 0.5% for being in the BOP scan, 0.5% for price volume scan. So both ads are 1%, HLTH and SGBK. The overall pullback is not that bad yet. If it would have been above average volume, I'd be more concerned. Bottom line is, these lows here is what matters. 615, 6.9, these hold, we're fine.